For more, we're joined by James Thomson, a former Amazon executive and current partner at Buy Box Experts, as well as Scott Ciccarelli, RBC Capital Markets retail analyst. Good morning to both of you.
Good morning.
James,
good morning.
I'm wondering, playbook-wise, it used to be in the very beginning, Amazon across the board competed on price. Mostly they don't seem to do that anymore. It seems to be on convenience. We saw Amazon Basics with batteries, with cables. Now this basic care. Is private label the new avenue for price competition for Amazon?
Private label does a couple things for Amazon. Certainly it adds more selection at lower prices, but it also gives Amazon the opportunity to pursue a more aggressive stance with some of the large national brands that may or may not be wholesaling to them today. So as we think about what products Amazon ultimately wants, yes, they want customers to shop on Amazon, but they also want to have all of the big national brands, even if customers are ultimately pushed towards purchasing some of the lower priced Amazon options.
So Scott, if you are Johnson & Johnson or GlaxoSmithKline, what do you do in this situation? Do you do what Amazon wants and just play and give them the brands perhaps at a lower price, or do you pursue some other strategic avenue to try to work around Amazon?
Well, what I think you've basically seen the retailers do, because they've been dealing with it, quite frankly, much longer than the healthcare companies, is you need to be price competitive at the end of the day. And we've seen Walmart do it, we've seen Best Buy do it, we've seen a slew of retailers who just said, look, I'm going to sacrifice margin to be more competitive with Amazon over time. So if I'm those big companies, what I would probably do is have some sort of, some sort of separation between some sort of basic product, and then you have a higher branded product where you're going to have exclusive distribution, where Amazon simply won't get access to X, Y, and Z, whatever those brands happen to be.
James, you're somebody who used to work at Amazon. This idea of private label, this idea of private label medicines, this idea of building out a transportation network with trucks and trailers, this is what we've seen other retailers do over the years. Is this just Amazon becoming a bigger retailer that can compete with the likes of Walmart?
I don't think it's just about introducing private label for the purpose of private label. One of the things that Amazon can do, unlike any other company, is they can look at their literally billions of transactions of data that they already have on consumers and figure out where there are gaps today. Where are customers searching for products but not buying because the national brands may be too expensive? And how does Amazon fill those gaps to make sure that they get that share of customers' wallets? So as I think about what Amazon's doing for private label, it's really about filling all those different product gaps and being able to use all of their data to pinpoint the exact areas where there really is opportunity for Amazon to be profitable.
James, how do you explain to people what you think their offline retail strategy is going to be over the next couple of years? By that I mean the degree to which they want physical presence on street corners across the United States.
Yes. Well, I think we start by looking at who the customer is that Amazon's going after. They're going after the prime customer. So this is not about going after every consumer out there who might have a brick and mortar shopping experience. It's about figuring out how do they get more and more of that wallet that the prime customer has today. When they acquired Whole Foods, that was really just one entree into how do you get more prime customers' wallet. I think what we'll see is Amazon continuing to try different types of retail experiments, basically for the purpose of going after more of that prime customer. I don't think that Amazon and Walmart, for example, I don't think they're competing for the same customer. And as I think about what was reported yesterday with Walmart starting to reduce the amount of marketing that they are going to be doing for the urban, young, premium customer, that's the prime customer. And Walmart is basically saying, we're not going to go after them anymore. And I think of Amazon now saying,
just want to get one more into Scott. Scott, from another perspective, is Amazon, you think, trying to vertically integrate, become more like Apple? When you look at Echo and Alexa all the way down, Whole Foods, this private label stuff, are they integrating after at first being more horizontal?
Yeah, and James would certainly have a good perspective on that, and we've spoken, the two of us have spoken in the past. I think that's exactly what they're trying to do. I mean, they've had to make massive investments on the technology side, and that allowed them to basically create this cloud business in AWS. And what else have we done? We've built out, our own transportation capabilities. So now they're going to push into not just following, a UPS or FedEx, but in a sense, almost competing with them. So I think that's exactly what Amazon's trying to do. They're trying to do a revenue grab from lots of different verticals out there, not just retail.
It's a big move. James, Scott, thanks for helping us understand it.
Thanks a lot.
Thank you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.